consumer specialist Rick Romero is here with our tax tip hotline. Hi, Rick.
Hi, Ellen. David, 5 weeks away. Oh man, that is a scary thought when you got to think about your income taxes. But we've got a whole panel of tax experts here from the Society of Certified Public Accountants to answer your tax questions.
Now to explain is Bridget Foreman. She's a certified public accountant with Bartlett, Pringle, and Wolf. Hi, Bridget. Thanks for coming in.
Hello, thanks.
You know, I've heard of nanny tax before. You hear it in movies, TV shows, maybe friends and neighbors talk about it. But quite honestly, I mean, bottom line, it's not just about nannies, is it?
No, it's not. Nanny tax really refers to the federal employment taxes that you have to pay if you bring a worker onto your household as your employee.
We welcome California Society of CPA spokesman Daniel Thomas of Thomas & Thomas. We thank you very much for joining us.
Pleasure to be here.
How bad is the foreclosure situation?
Well, I think it's as bad as it's ever been and probably going to get worse. In recent times, we've had a lot of foreclosures that have started occurring. And if you look back in time, the types of loans that have been made in recent times are the types that potentially will give people trouble down the road.
And in case where an emergency is declared, you may get a break from the IRS.
They can sometimes postpone or extend deadlines, filing deadlines, and sometimes even abate interest and penalties for those in the areas of disaster.
Sock away for retirement. A 401k is a great place, and putting it there can lower your taxes.
Every individual can put aside up to $15,500 in 2007 into a 401k account.
A lot of talk about foreclosures, and we've got one expert right here, Tim Good, to talk about that. And Tim, first of all, like I mentioned, there are a lot of people talking about foreclosures, and I think few people realize that there are tax ramifications if you file foreclosure.
Absolutely. A foreclosure is considered a sale of the property back to the bank. And there are substantial implications depending on whether you've refinanced the house or whether this is the first loan that you have on the property.
Sorry, if you want to buy a Toyota Prius, well, I've got to tell you, they no longer qualify. And with me right now is V. Cristobal.
Hi.
She is one of our tax experts. And V, why is it the Toyota Prius is no longer qualifying?
Because I think they exceed the maximum already, so they can no longer use that credit. But of course, if they have to buy the Highlander and some other car from Toyota, I think they're still going to be able to use that credit.
With me right now is David Flamer, and David is one of our CPAs. Good to see you. David, I just wanted to know, why is it a flexible spending account can save on your taxes?
Rick, anytime an employer allows you to have an arrangement where you can have money come out of your pay, be put into what we call sometimes a cafeteria plan to be used for medical expenses or dependent care expenses, those amounts that go into that plan come off of income for you. So it's almost like you're getting a deduction for spending money that you would normally spend anyway.
With me now is Ida Yarbrough, and Ida, there has also been a change when it comes to property, when you give away furniture and clothing and that sort of thing.
Absolutely, Rick, and the guidelines are getting a lot more strict. If you have to give away something that is in good or great condition, you can no longer give away those socks and get a deduction for those socks that can't be utilized.
Rob Seltzer is just putting somebody on hold to ask you about that. The tax relief for fire victims, what's that all about?
Well, casualty losses are deductible, but there's some limitations. First of all, you have to take into account what insurance reimbursement you're getting.
If you have a child in college and you provide more than 50% of the support for that child, they could be subject to the kiddie tax.
That's Teresa Mason, chairperson of the California Society of Certified Public Accountants.
When it comes to taxes, it's all about numbers. And Encino CPA Steve Dubin warns to watch out for a potential costly wrong number when filing your state tax form this year.
Anyone who's filing a California income tax return that has itemized deductions involving interest expense would be affected by it.
Certified public accountant Laura Cullen is here with ways for us to safely secure those important documents that we may have at home. So Laura, welcome to the show.
Thank you.
Let's first of all talk about what the 14 documents are that we need to secure.
What we suggest is putting those documents in a safe. This one is a Century safe. It is waterproof and fireproof up to 1550 degrees, which is important because a fire normally burns at between 900 and 1200 degrees.
Retailers know the earlier we start Christmas shopping, the more we'll spend. Dan Morris of the California CPA Society says for every 30 days the season lasts, we spend an extra $200. That's why the old pumpkin's getting bumped.
What's shocking is 55% or so of the people don't even budget. And those that do already agree that half of those or 20% of those are already going to bust the budget.
HELOCs, or home equity lines of credit, have dropped below 5%.
Home equity lines are very attractive right now. Wall Street Journal Prime less 1%, which right now is about 4%. Excellent rate.
Greg Witt, a director of the California Society of CPAs, explains that you're able to deduct up to $100,000 with a home equity line, which makes the effective loan rate even lower.
Certified Public Accountant James Allerue is here today with some tax tips made simple. So let's talk about what we need to know in order to get our taxes ready for our accountant.
The information that I usually require of my clients, usually I would send out an organizer. It's a form that I send out that basically lay out the type of information that I'm looking for.
And oil prices spike, causing pain at the pump.
That auto worker who's making 20 bucks an hour, in terms of what he can buy internationally, he's only able to buy the equivalent of $15 worth of goods and services.
Finally, we've got charitable receipts. This is something new this year. They need documentation. And with me right now is Nancy Chandler. She is a certified public accountant. And Nancy, thank you for being here. What is this now that we've got to show all this documentation regarding charitable deductions?
The IRS thinks this is an area that people have been kind of fudging on, so now you have to have documentation for everything. Anytime you claim a charitable cash contribution, you have to have a receipt or a check.
With me right now is Brian Yacker, and Brian, thank you very much for being here. Welcome. Tell me about this debt cancellation exclusion.
Yes, it's a new law, and what it says is that when your mortgage is forgiven, when you're no longer liable to pay your mortgage, what used to be taxable income now, because of that act, is not going to be taxable income.
With me right now is Marietta Fong. Marietta, you're a CPA, and the questions that you've been getting, I guess you're getting an awful lot of them about the tax rebate checks, right?
People who don't normally have to file a tax return are asking, how's the IRS going to find me in order to send me a check? And the answer is you have to file a tax return even if you don't owe any tax.
The hottest topic that we've had so far has been about the tax rebates, and with me right now is Alan Intus to talk about that. Alan, you said you've gotten an awful lot of phone calls about this tax rebate.
Most of the calls have to do with the tax rebate. People are concerned when they're going to receive the rebate and how do they get it.
The current housing crisis is a serious threat to your financial well-being, so what can you do to protect yourself, especially now? Joining us today is a CPA and partner with the firm Burr, Pilger & Mayer. She is also the treasurer of the Cal CPA. Welcome, Andrea Cope. What happens if you're the guy sitting there and the foreclosure is knocking on the front door?
Well, I think it's really important that you talk to your lender. You've got to get to someone who is a decision maker. Most lenders want borrowers. They don't want to own properties, and they will do everything they can to help you through this process.
There are many ways to cut down on energy costs, and here today to help us do just that is certified public accountant Kendall Wheeler. So I understand that one way is to conduct an energy audit?
Yeah, so grab your spouse, get your kids, and take them on an energy audit of your house.
This week is the California Summit on Financial Literacy for High Schoolers. It's such a great idea. CPAs will teach these teens about how to be smart with their finances. They also have a program at the Sacramento Convention Center on Wednesday. And Bruce Kajirawa is one of the CPAs doing a presentation at West Campus High today. Thanks for joining us.
Thank you for having me.
Now, what are you going to tell kids today? What's the best piece of advice that they need to know?
I think for kids nowadays, the key advantage that teens have, that younger people have over their parents and over me and you, is the fact that they are younger and they have the advantage of time. When I talk to clients and they want to retire and they can't retire, they invariably say the same thing, is that they should have started saving sooner.
CPA Melody Thornton is here this morning to show us how changing simple habits in our lives can save thousands of dollars every year. Good morning.
Hi.
People really are pinching their pennies, everybody from trust fund babies to people on a budget.
It's true. A year ago, in March of '07, Harris Interactive took a poll, and just 2% of the people were trying to spend wisely and save. The poll was taken again in March of '08, and it has changed incredibly. Due to the concerns about the recession, suddenly 25% of the people polled said they are now trying to spend wisely and save.